It's been an amazing ride for Carvana this year as price came off the lows at $4. En route higher, it formed weekly and daily buyer's levels at around $5. Price now finds itself between a daily buyer's level and two daily seller's level. Before we continue with the analysis, let's get into this article. It's coming from Investor Place. It's titled Carvana Stock Alert, What to Know as Carvana Boosts Q3 Outlook. On paper, automotive e-commerce platform Carvana seemingly offers more to celebrate as it announced an improved outlook for its third quarter. Progress in key business drivers and strong momentum early in the quarter led to a positive disclosure. However, analysts remain skeptical about the company's path to profitability. In the first 2 quarters of this year, Carvana posted best ever quarterly GPU and adjusted EBITDA performances, and our continuing performances so far this quarter has led us to raise our Q3 outlook, the CEO said. The CFO further added that its strong execution continues to drive lasting business improvements. These upswings include fundamental gains in retail and wholesale GPU that would undergrid future results. So GPU means gross profits per unit. Unfortunately, investors didn't find much in the news. Not only did Carvana stock fall during the mid-week session, it dipped roughly 17% during the trailing 5 sessions. Increasingly, the consensus viewed among analysts for Carvana's third quarter adjusted EBITDA was $47.7 million. Therefore, the updated guidance of over $75 million should be a hopeful sign that Carvana stock might regain its footing. Unfortunately, the company has been struggling with heavy debt loads as it faced a slowdown in used car markets. However, the car market is recovering and they were able to restructure their debt. One of the major headwinds is the aforementioned debt load. So far, Carvana failed to post positive net income for a full year due in part to significant interest expenses related to its debt. Bloomberg notes that the recent restructuring will lower borrowings by $1.2 billion and provide the company the opportunity to delay some interest payments for the next 2 years. And that was the reason why price really surged when they announced that restructuring deal, as they could kind of delay their interest payments, allowing them the capital needed to continue to build out their business and reach that economy of scales needed to become profitable. But as I mentioned, price now is between 3 zones really. You can see how price hit the first daily sellers level, collapsed, came into the daily buyers level and moved higher, and then collapsed again. I'm anticipating price penetrating the zone a bit deeper. Let's give it some labels. All right, so that's the daily buyers level at 36. We'll say that's daily sellers at 37. And daily sellers at 66. So let's look at the structure, which I like. You had a drop in price, a couple of basing candles, and then a leg down or drop in price again. You had a drop in price, a legging candle, a couple of basing candles, and a leg out. This is what you call a level on level, one of the strongest formations that you can have when trading supply and demand. As you can see, price did come back to that zone back in August, and that was the collapse to $4. Now each time this zone gets penetrated, it gets weaker. It's like a dam. So I anticipate the next time price moves higher into this level, it's going to be breached, as it's looking for unfilled sell orders, and that's going to be above. As price penetrated this zone a couple of times, there's not too many unfilled sell orders between $52 and $60. The longer we hang out in this daily bias level at 36, expect price to continue to move down, again in search of those unfilled buy orders. If this zone is breached and price closes below it, look for price to move down to the $20 level. However, what you can see is all your moving averages are pointing up. You have the 50-day moving average coming into the zone as we speak. That should serve as dynamic support. Again, nevertheless, the longer we hang out in this area, price is going to continue to wean down, potentially eventually breaking and closing below the daily bias level. So the chart suggests there's no trade setups at the moment. Price is really stuck between level of interest from buyers and a couple of levels of interest for sellers. You can play the range, but the range is $10 to $15. The better move was getting long when it bottomed. At this time, you got to wait for a breakout in either direction before placing a trade. Thanks for watching. Subscribe, please. Like the video.